Whew, all right. Welcome to week 5 of the new year, everyone. This will be Outlook number 1 for week 5. It is extremely cold where I am. We got snowed in. But yeah, it doesn't stop the markets, right? So let's go ahead and start with GBP. What in the happened? Well, as you can see from the macro perspective, the analysis that I called out in the previous outlook in 4.2 played out perfectly. Now, what I'm going to do here is I'm going to go down to the 4-hour to reiterate what I explained. I was telling you guys that at the time, one of my students and I, we were discussing the action that was going to occur at this liquidity point, at this structural point, or really, I guess, internal liquidity point, or internal structural point, if you want to call it that, based off of this action here in relation to this action here. And we said that there were two possibilities, two scenarios. The first one is a break of structure where we decide to go ahead and break past this low here. And if there was a break, then we would continue towards this low, assuming there's no liquidity left in this area that is unmitigated inside of this bullish run here. And the other scenario is what has played out, which I explained there was going to be a draw on liquidity, and that would essentially generate enough liquidity to push us higher, assuming that we would take out, these highs, the previous high, this high, that high, all of these highs into the area of interest that we were looking for. Well, we did that and a lot more. So what ended up happening was we actually did get a subtle response from the 50% of the 4-hour area of interest that we were looking at. And I believe before it was measured as a price gap, but because this price gap is, it is a sponsored candle, I was looking at it from the price gap sense, but refining it or re-looking at it, it did mitigate 50% of the price gap, and that's what this wick is showing right here. This wick here is showing that mitigation, and it gave a slight reaction, a slight response, and then it decided to press higher. Now, this is very interesting because this is going to dictate a few things. One is I had been assuming this entire time based off of structure that this was the last unmitigated area inside of this bearish price leg. And so all of this price action that was forming and that formed was an attempt to get back up to mitigate this area of interest. And so because this area of interest was mitigated but failed, what this leads me to believe is that there is, similar to this area here, there is nothing left in this bearish, basically price leg that is unmitigated from the 4-hour perspective that will keep us inside of this bearish price leg. So there's two scenarios that I see here. Either one, there's something inside of this wick, but I don't really talk about that. I try to keep it to very price gap and sponsored candle frame structure, and then liquidity points and structural points. Or that's first scenario. There's something in this wick that's being mitigated, but highly unlikely. The other two scenarios is that if this fails, whatever's in this wick fails, we're going towards this structural point. And this is a major structural point, as in we could potentially be shifting back into a bullish run, or depending on what action occurs here, this could be a major draw on liquidity. And then we would have a very, very low effort, high volume liquidity run to the low side. So those are the two scenarios broken down, based off of objects and actions that I talk about that can happen here. And so looking at it from the macro perspective, what we're looking at is a transition of state potentially. And it's either we're going to get, like I said, a transition of state to where we go from a bearish run into potentially straight into a bullish run and continuation, or what we could get is a liquidation or a liquidity draw of this structural point here that led to the bearish run. And then if we get that, what I would like to see, similar to how we did here, but on a macro scale, is I want to see something like this. So I would want to see a liquidity draw like that. And if we do get a liquidity draw like that, I'm anticipating that it's going to be a very low effort. And when I say low effort, like nothing, the reason why I say low effort, nothing inside of this price leg now is unbalanced. This price leg is completely balanced. This sort of range here, that's what a price leg is really a range, is completely balanced now. And so if we achieve the target, which this bullish price action is looking to hit, then based on the action that occurs here, either we're going to get continuation of price action, bullish price action moving higher, or we're going to get a reversal in the form of the action of a liquidity draw here at this high, and then we're just going to completely run the table here at all of these lows. Those are the two scenarios that I see. So as of right now, this price gap that I've been looking for the freaking longest decided to fail on me. I mean, in the sense of structure, it kind of was based off of how the structure was forming. It was trying to trying to stop a moving train here, just based on the momentum of what this was happening. So that's something that has to be taken into account. But it still did give a response. And so just because it doesn't give the favorable response or like the very wiki entry and then continuation doesn't mean that the play is wrong, so to speak. It just means that the liquidity that was once in that area is no longer there. It had been mitigated, but it was not strong enough to continue the move downward. And so because that liquidity pool was not strong enough to push price or continue the price action going lower, it's going to pull back potentially into a larger liquidity pool that can achieve that action. And that's similar to the exact price action that happened here, where we got, this initial bullish price action here that led to go higher, but it failed to do so. So price reached back into a deeper liquidity pool, and that's what led to the action that happened here. And so all of this is just draws on liquidity pools to target different liquidity pools or to deliver price to different liquidity pools. I hope that's pretty clear. All right. So as far as GU goes, or 6B goes, this is clear. This is clear. We can basically clear the chart here. Everything is now brand new. So what we're looking at is we still have the bearish price leg intact. There is, to reiterate, the bearish price leg is intact. We're still looking to see if price, runs this high, and then what action occurs. Anticipation scenario 3 essentially is what I'm looking at. So first scenario is mitigation of whatever was inside of that wick. I don't care. Scenario 2 and 3 are the ones that are important to me. Scenario 2 says that, hey, do we get a break of structure? If we get a break of structure, we're continuing bullish price action, in which the next target will be this high here. And scenario 3 says, hey, if we looking for continuation of bearish price action, and this just ends up being, an initial bearish price leg that was just to pump liquidity into the market, so to speak, then what we're going to get here is the draw on liquidity of this bearish high that led to the run on these lows. And if that happens, then we're going to get a draw on liquidity, formation of, areas of interest here on the 4-hour time frame, and then that will set us up for opportunities to catch trades moving down significantly, aiming for this low here. So that's what we're seeing on 6B. A lot more in depth, but that's the mindset that I have going forward with this pair. All right, moving on to gold. Congratulations, gold. You reached all-time high yet again. First time, I believe, crossing 5,000 per ounce. So yeah, I mean, there's not really much to say here on gold. From the macro perspective, we are just in a very, 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 very strong bullish run. Honestly, I don't even think these structural points that I have marked up right now are relevant. I think what I'll do here is, pending future price action, we're going to go clean slate on gold anyway. So I'm going to clear everything. Yeah, everything that I have on this pair. And we're going to look at it moving forward from the 4-hour and see, do we get a transition eventually into bearish price action? Do we get transition from bullish price action to bearish price action? Other than that, I mean, you can just simply stay on the 4-hour time frame and look for continuation opportunities. So every time we get, a run, a bullish run, and then we start getting pullback, that's an opportunity to get into the trade to target the high, or just continue to hold your gold trades because this is very strong. But be very wary that because we're in all-time high territory, there's a lot of psychological factors that affect people. It's like, oh, if I'm all-time high, I need to sell before everybody else gets out the market kind of thing. But that's not really the dynamics, the market dynamics that, drive gold. But hey, that's just, that psychological dimension is what factors into price action in general, or just the markets in general. All right, so that's what's happening on gold. It looks like right now, though, that we have pulled back into a price gap and mitigated it at least 100%. I'm going to be very certain here. Did we? Yep, we did. So we mitigated a price gap, and you can see the very slight response here. So either this is going to respect this and continue higher, or just in the very near short term, which is, it's a really nice drill to have to understand mitigations and seeing how they play out, and seeing the scenarios in very localized regions, is either scenario 1, respect, action, and mitigation, and we continue higher to take out the next high, or failure of the price gap. And if, because there's no liquidity left in here, there's no price gap here, I mean, you can kind of argue this, but I wouldn't really see it. I mean, if it does, it does. If not, whatever. But failure of this price gap would lead to attacking this liquidity point here. And if we attack that liquidity point here, that means that doesn't necessarily mean that we're looking to transition into bearish price action. This is just a failure of a price gap. This is not structural at all. This is just a price gap. This is inefficient pricing. This is a structural point. If this structural point, if the action that occurs at this structural point is a break of structure, then yes, we will potentially transition into bearish price action. And I say potentially is because we'll need to assess the price action that happens post a break of structure. And then if there is a liquidity draw at this liquidity point or structural point here, then what we would need to see is the formation of opportunities to continue higher to take out this high. But not only that, immediately upon looking at this structural point here, we see another price gap that is slightly lower. So what we could have is a combination of actions here, where another scenario is we get the liquidity draw at the structural point, and then we also get an action and mitigation of a price gap. And those are very, very powerful, and I would say kind of rare to get and to notice, but they happen. All right. So that's what I'm seeing on gold. So scenario 1, respect of the immediate price gap. Scenario 2 is failure of the price gap leading to an action that occurs at this structural point because there's no liquidity left to maintain price at this level, or in this area of inefficiency, because it is now balanced. And scenario 3 is, do we get based off the action, do we get a break of structure, or do we get liquidity draw plus action and mitigation, and then we move higher? All right, so that's what I'm seeing on gold. NQ, oh boy, let's go back up to the daily for this. All right, we are still stuck in this sort of, at this point, it's a consolidatory range. It is a price leg, but at this point, it's just a range. We very much respected this 4-hour area of interest where we mitigated 50% perfectly. This area of interest is what sparked all of this price action, and right now, the participants in this market, we're just battling it out, right? There's a lot of economic activity going on, and the market doesn't know what it wants to do. So you can trade it, but I would highly recommend, if you're swing trading this kind of pair with this kind of price action environment, you would want to stick towards the bullish bias, because that's the overall bias, the macro bias. And that means you would look for 4-hour opportunities for pullbacks into catching trades moving higher. You can catch counter trend trades because we're on the premium. They are secure, but as of right now, it just looks like this is coiling up to do something absolutely stupid. And I mean stupid awesome. All right, and so on the 4-hour perspective, what we're looking at here is, like I said, we have mitigation, perfect mitigation, 50% of this area of interest here. So all of this price action from here up until the mitigation is completely balanced. So any new price action that is going to be generated is where inefficiency will be, generated. And so as of right now, all I see is a bunch of really liquidity points on the premium side, and then our ultimate liquidity point that we're looking at to be mitigated. If these liquidity and failed to speak here, these liquidity points are important to assess and to utilize, because essentially every single liquidity point we have to assess the actions that occur there. Do we get a break of structure, or do we get a draw in liquidity? That is really important to know. Every single one of these liquidity points, every single one of these highs and lows needs to be analyzed in the same manner. Action, is it a break of structure or a liquidity draw? If it's a liquidity draw, we can assume that we are getting a failure of price action to continue in the direction that it's going, and it's going to reverse. If we get a break of structure, we assume continuation and the price action has not failed. That's it. All right, so as of right now, reaching this last liquidity point, or this current liquidity point that we're acting at, this could be a potential draw in liquidity. And if it is a potential draw in liquidity, then price will look to pull back into some sort of inefficient pricing pool, or it will target a previous liquidity point. All right, silver. Similar to gold, silver has absolutely outdone itself this year so far. It's reached 115, which is absolutely insane. Didn't think silver, I really didn't think any of the commodities, the metals, precious metals specifically, would be booming like this. But because of the economic activity, I mean, it is this century's roaring 20s, we're just absolutely just dousing a fire here with all this price action, bullish price action. So we're going to see what happens with here. Like I said, I'm still not really trading silver per se. I'm just watching it because I plan on looking at the price action and trading it here soon. But because we are so high in the bullish run here, I really would like to see a potential transition of price action, of bullish price action to bearish price action, to capitalize on the bearish wave moving downward before I start looking to trade this. Because right now, I mean, you can get caught up really easily, like I said, because of the psychological factors, where the higher we go, the larger pool of sell pressure, or the larger the sell pressure will be. That's just like natural for any market. The higher you go, the more potential sellers there'll be. The lower you go, the more potential buyers there'll be. And so because we are literally at all-time highs for silver right now, it's not a good idea, in my opinion, to look for buying opportunities, even though it is aligned with the overall macro bias of a bullish run. So I'm going to sit on the sidelines for silver right now. And then we move on to the pair of pairs, the god dang Dow Jones. Still messing around, similar to NASDAQ, inside of this range, inside of this price leg. This price leg is a lot more clean than the NASDAQ price leg, because we have a clear structural point that was a part of a mitigation of a previous price leg, and then that we have a clear liquidity point that anchors the top of the price leg, and we have a defined pullback. And now, we see we have mitigation of a 50% of a area of interest here. I still hold on to the conviction that this area of interest can be refined into this green box that I'm looking for. And we talked about the premium side mitigation of this price gap that actually ended up failing. And I called that it would, if this fails, this is going to continue lower. And so now what we're looking for, if price is failing to move higher, to take out liquidity point, it means, based on the principle, that this price leg is left unbalanced. And if it's left unbalanced, we need to find where that origin or last pool of inefficient pricing is that will spark the real move. Right now, it's just building up liquidity, and in tangent to real world data, we're just doing a lot of economic activity. There's a lot of things going on with the companies that comprise of the Dow, the companies comprising the Dow Jones. And so right now, there's not really much to say here other than like we could be looking at this liquidity point here. This is very subtle. Yeah, that's very subtle there. That, but nonetheless, it's a liquidity point. This liquidity point here could be a draw on liquidity here, and then we could be moving lower. And if that is the case, well, we'll need to see where is inefficient pricing. I mean, immediately there is inefficient pricing here, but it's on the premium side, so it's very risky to take a trade based off the premium for buys here. But if it's aligned with the bias and if this is holding true, you can take it. But for me, I want to see a little bit more bearish price action. Like I said, I'm being extremely stubborn with GU and the Dow Jones right now. I'm looking for price to pull back into this green box. But as of right now, this green box failed completely as expected because the origin of the move is not yet mitigated. So I would like to see price pull back into the origin of the move that I see. And if not, if it does take out this high or continues bullish price action, take out the high, so be it. Then we'll just, look for the next opportunities, capitalize off the next price leg, and go from there. All right, so I just talked a lot. I'm sort of losing my voice. I didn't expect to talk this much, but that is week 5 outlook number 1. Please let me know if you guys like this level or deep depth of content and depth of explanation in these outlooks. If not, I can revert back to very overview, very surface level talks about the markets. All right, peace.